Hi, so it's been a couple weeks since we've done one of these videos, and we really wanted to touch base about what's going on in the economy. A lot has been released, a lot of information in July. We've been looking at GDP for Q2, we've been looking at corporate earnings for the second quarter, and the jobs report came out. So lots to go over today, and also the market has
kind of been better through July. Yeah. So one of the areas I think we should talk about is are we in a recession or not? And
I've been wondering that because you don't hear whoever the official person who dictates that it's a recession has not deemed it so yet.
Correct, but I've been saying that we're in a recession, and I'm not alone. Other people in academia feel the same way about it. And to review, the rule is 2 quarters back to back with negative GDP growth, and we've got that happen.
Yep.
But we should talk about why they think we're not in a recession. I mean, we've had those 2 negative quarters. You've been looking at the unemployment rate. Why don't you kind of talk about that a little bit?
Yeah, it's curious. I mean, that's one thing that I keep going back to. How are we in a recession when we have record unemployment? I mean, it's even unemployment ticked down a point even for July. But
it's at 3.5% now.
It's at 3.5, down from 3.6 the month prior, which is curious because we still have a lot of jobs unfilled. We still have 1 million jobs in the service sector, like hospitality and entertainment and in healthcare, that are not filled, that were filled pre-pandemic.
Right.
And so it's kind of it's a wonky thing. We have record unemployment, and yet we still have so many jobs left unfilled, which would tend to indicate that we don't have enough workers still.
Right, and so part of the reason is, and we were talking about, a lot of baby boomers are retiring. They're hitting that age where they retire.
Yeah, you see the percentage of the workforce actually going down.
Right.
By 0.1% for the last 3 months, actually.
Right, and so you have all these people, and then you had a number of people who took early retirement, and then you had all the lower workers moving up. So everyone's moved up to fill those higher jobs of the people retiring, and that really leaves the service sector and the entertainment sector, and the hospitality, they're short. They're running real short because that's kind of like the beginning of that's the lower end of the employment area.
Meanwhile, that's the fastest growing sector of the economy right now.
Right now, as we move into the recession, where the spending is you're correct, in restaurants, travel, and hospitality. That's the area the growth is, and what's going down is retail and that kind of stuff.
You even see it in airlines right now, right? They're talking about how a lot of flights are getting canceled because they just don't have enough workers.
Yeah, and you see a lot of restaurants. We were on the way to Osh, is what I've been told you call Oshkosh, for the air show, and we landed at a place that advertised that they would be open for people going to Osh for lunch, and they were closed because they didn't have enough workers, the diner right on the airfield. So you see it on restaurants, hotels, everywhere they're feeling it.
I mean, my sense is it's not just people being lazy. I think it really has more to do with retiring early because the pandemic was a stressful time to work if you were in healthcare or you were a teacher and you were having to go into the classroom.
Right. Well, and I think it's also the colleges and education system are not turning out the workers we need. The lower birth rates in your generation is an issue, and then lack of migration. It's a combination of all. We did a YouTube on the whole labor shortage and how it's not going to go away easily. It's a combination of it. So then the next thing we should talk about is the bullish percent, what we're
Mhm.
seeing here. And just to review to people who have watched this before, when it's the lower blue line, which is 30, it means the market is oversold. And we saw that back in late June. You can see this columns of zeros and X's. And when it's above 70, it's overbought. And right now, the market has actually come back very quickly, and it's all the way up at 72, so the market's overbought. So basically, what we're saying is that we've had a nice run. It's not over, but we probably will have a little bit of a give back, and then the market should take off to higher highs.
But we think that the market has potentially hit a bottom. Or
Correct.
the bottom,
Yeah,
hopefully.
Yeah, and so what we want to do is bring up the next slide, and you can actually see when we've been in these periods before, and we list all of them going back to 1998, you can see what happens 1 week, 1 month, 3 months, 6 months, and 1 year. And what you'll see 1 year, 12 months from now, on an average, the market's up 23% from where we're at now. So you're hearing it here. We think this is the last opportunity to really get into the market before it really takes off. And the market goes up long before the recession's over. That's an important thing, and it usually does it in a V. Most of the money is made in the early part of that recovery. So what we're saying is this is a really good time to be getting back into the market. And on our next YouTube, we'll be talking about where do we see you want to be investing. So for now, thanks for joining us.